guys, what's going on? Coming at you with a Thursday afternoon video. I've been gone for a couple weeks. I actually went on a vacation for 2 weeks, so I took time away from basically YouTube and all that stuff, but I did want to make a video about what I think is going on in the market right now. The market, the QQQ, ran to the 50% retracement a couple weeks ago. That's a good sign. That usually historically means that a bottom was set. So what I mean by that is when we hit those June 16th lows in the market, chances are we might test that level or come near it, but we're probably not going to go lower than that unless something super catastrophic happens in the market with like a financial crisis or like a dot-com bubble, which I personally don't see anything right now. So you don't want to be out of this market and say, oh, well, I'm going to wait to hit new lows, because that very well might not happen. So what you want to do right now is basically just dollar cost average trade positions as a long-term investor and kind of go from there. So some stocks I've been buying right now, I bought a lot actually this morning after this massive pullback. The 2 and 10 year yields, they're inverted, which is a sign of a recession. 2-year yields are at 15-year highs. They're over 3.5%, 10 years over 3.1%. So that means interest rates are going to be really high. It's going to squeeze people in getting loans and buying things and stuff like that, which is exactly what the Fed wants. They were very firm in their meeting last Friday. Jerome Powell said he's not going to stop until inflation is under 2%. I think that's being a little hawkish. I think when they see it significantly come down to 4 or 3.5 or 4.5, they're going to lay off the gas and kind of pivot. That's my opinion. So basically what I'm doing right now is I'm just dollar cost average. Like I said, I've been buying a lot of NVIDIA. There's a lot of fear with AMD, NVIDIA, with the contract deal with China sending chips over to them. The federal government's renegotiating that whole deal where they might not be able to send the newest chips over there, which is fine. I think that's just, there's a lot of fear and panic in the market for that. I think it's a great buying opportunity in my opinion. Just like kind of like the Russia-Ukraine conflict right now. Russia's banned from importing oils to Europe and all NATO and stuff like that, but there's obviously workarounds. They're still pumping just as much oil out from the sanctions and not, so obviously it's going somewhere. There's a lot of rumors that it's going to China. They're rebranding and selling to Europe, so it's just an extra step. They're kind of China's the middleman. So kind of just like the chip thing, in my opinion, it's going to be the same process. Someone's going to buy them, they're going to send them over there, and then they're going to have the same things we have, and that's just how it works. People when there's adversity, people just figure things out. So I'm buying NVIDIA, buying Shopify, love Meta at this valuation. So those are really the three I'm really focusing on right now. If JP Morgan drops a little more, I will be buying that again. Same with Disney. Those are really the top 5, but really Shopify, Meta, and NVIDIA are the ones I'm focusing on right now. Everything else, like all my small and mid caps that I've been buying for the past year and a half, they're really fully built out. I don't want to make them any more weight in my positions. That's kind of why I'm steering away from them. Great deals in small and mid cap still, but those are the 3 core ones I'm focusing on right now. I might make a video this weekend when I have some time of my cost base on my favorite stocks this year, what I've been buying, where I think they're going to go. But kind of what I'm doing right now is I'm just dollar cost averaging, just sticking with it. I did cash up the past when the market rallied off the bottoms of June all the way into the beginning of August. I think it had a 6-month green rally. I was just stacking cash. Well, I deployed all that when the QQQ went to the 23% retracement, or when it went to 318, which I believe is a 30% retracement, and then the 300 mark is, I think, the 18 or 20% retracement. I loaded just about everything in, and I bought more today because we're under the 300. So the next one would be the 0 retracement, which would be the 268, I believe, QQQ, but I don't think we're going to get there. We might test it this month. Historically, September is a very bad month in the market. It's the worst returning month of the year. A lot of people close their books and stuff like that, and the summer's over and stuff like that. And then usually November, December, January, February historically are great months in the market because of the holiday sales, and people get excited for the new year, the reset, and all that stuff. So that's kind of where I'm at right now. So I'll make a video maybe later tonight or tomorrow on the stocks I'm buying, why, and where I see them going and stuff like that. So if you guys haven't subscribed, please make sure you like, subscribe, comment, let me know your thoughts. What are you guys buying? Till tonight or tomorrow. Peace.